Hello traders and welcome to another video review. Today is Tuesday the 2nd of February 2021. Let's take a look at the Forex calendar and then of course we will do some technical analysis. Today on Tuesday we got some data published already. Most of them were from Japan, for example, like unemployment rate, which was better than expected because it's falling to 2.9%, monetary base and the capital spending. But those data have a low importance for the market participants. Much more important data were from Reserve Bank of Australia that published its interest rate decision. And as you can see, the interest rate of Australian dollar is still at the same level of 0.10%. And of course, 4:30 in the night, there was a monetary policy statement from the Reserve Bank of Australia published as well. So we will definitely take a look into the Australian dollar today to see what is going on there and how this influenced the price action. During the London session, we got some data from the Eurozone. We got retail sales data published already at 8 o'clock from Germany. As you can see, they were way worse than expected. A little bit better than last month, but way worse than expected. Minus 4.1% the actual reading was, but the expectation was on the plus 0.2%. So that's a complete miss. From the UK, we got the house price index, and the house price index in UK is rising from minus 0.2 territory to 0.7. So that's a quite nice rise in the of house prices in the UK. Unemployment change and unemployment rate data from Spain and Germany are scheduled for release at 5 to 10 o'clock. We got some data from Eurozone as well at 11 o'clock. They are scheduled for release data regarding the consumer price index, so we can see if the inflationary pressure are rising or not. The reading for the February is expected to be at the same level of 0.9% as on the previous months. So we'll see if there will be any pressure from the inflation to hike this consumer price index. During the New York session, we got data from Canada, gross domestic product, and the quarterly gross domestic product annualized. Very important data from Canadian dollar, so we'll take a look on the Canadian dollar today. The last reading was 0.7%. The forecast is 0.1%. So they are the economists are forecasting the decrease in our gross domestic product of 0.6% month to month. So we will see if there's any kind of a better than expected result, like and the actual reading will beat the expectations. Then we can assume that the Canadian dollar will be bought and the US dollar will be sold. So that's interesting thing here. We got some data. 7 o'clock, of course, PM. We got the FOMC member Laleh Brainard speech, and then we got some data from Australia. As you can see, PMI manufacturing data, building permits, and AIG construction index. Not very important data for the markets, but for all of you who trade the Australian dollar, you don't want to miss this kind of data from Australia. So Canadian dollar, I think Australian dollar, New Zealand dollar is our main focus today. So let's see how the Australian dollar is doing after the interest rate decision. As you can see, we have a sell-off. We have a big sell-off after the level of let me just drag it down a little bit. There you go. After the level of it will be 8,000 pips. Yeah, 8,000 and apparently 8,008 pips after this level was hit. We have a bearish engulfing pattern on the daily candlestick, right? Daily candlesticks, bearish engulfing. We have a continuation. This is the short-term trend line. As you can see, it has been tested, but this candle closed already below this level. We are very, very close to the 7,679 pips technical support level. Shallow bounce towards 7,806 pips, but it didn't hit yet. The level of 7,824 will now act as a technical resistance. So right now this is This is our key technical level right now. So this is the key technical level. Please keep an eye on 7,822.24. If this level is violated, that would likely mean we are going back towards the 8,000 pips level again. On the other hand, any breakout below 7,679 opens the road towards the lows of this 2nd of the February 2021 at 7,564. How does it look on the bigger perspective? As you can see, we are still trending up. But those are key levels in the short term, and this level here, the level of 7,415, is the key level in the little bit longer term. So please keep an eye on this level as well. So right now it looks kind of a bearish, and the momentum supports the bearish outlook for some time. So maybe it's time to make some sort of the correction on the Australian dollar. Let's see how deep was the other correction. The biggest one from let's say this is the low. Yeah, there you go. The lows of the 2nd of the November 2020. Let's see, let's take this and do the price range. I think that was the biggest correction. What I'm just looking for is the price range, so I don't mind the time. Let's say it was 3.22%. So if now we will go lower than 3.22%, then it means we might be starting a new cycle. And there you go, we have 4% already. Okay, we got a 4% correction, so that means this slide down is the biggest one during the whole move up. So it's very, very probable that we are in progress, in development of making a new corrective cycle, maybe in form of ABC to the downside on the Australian dollar. So let's see if the New Zealand dollar reacted the same way. Of course, as you can see, again, we have this level here. This level here is, let me just mark it here, 7,461. This is the top. We have a piercing pattern, the candlestick piercing pattern on a daily time frame chart. That's not very good for bulls. We have a continuation. Again, this is the technical support for the price, 7,244, already violated. We are getting closer towards the 26th of the February lows, which was on the level of 7,219. So if we break below this lows, that means we are going towards 7,168. This is our technical support. Let me just make it green back on again, so we will not get confused too much. And this is our technical support. Of course, we have this nice breakout to the upside from the triangle, but that's the past. And as far as I can see, let's do the same thing here. I mean, we will look for the biggest correction. This is 2.99%, virtually 3% correction. And this one here, the newest one, is already 3.25. So that's, again, the biggest correction since 24th of the September 2020. That's the biggest correction. There you go. So the market might be ready to start a corrective cycle to the downside. Please keep an eye on the levels, and this is the lows. We have to drag it a little bit here. This is the key technical demand zone, right? This is the demand zone. I think I got it because, yes, there you go. There was some important levels here. Of course, right now it used to be resistance, now it will be support, so let's keep it color coded. There you go. And this is the current situation on the market right now. We are developing the downside move. This is the key level. And of course, those two levels are the key ones, 7,151 pips and 7,175 pips, virtually 24 pips of the zone just in the middle of this of this old triangle. So that was the New Zealand dollar, Australian dollar. I think there was something about the Canadian dollar in today's calendar. Yes, of course. And we have the reaction on the Canadian dollar. Please take a look at this. We have the first thing is the lows. The lows were made at the level of, let's say, 1.247067, so that's almost spot on. We have a very nice bullish engulfing pattern on a daily time frame chart. We have a continuation, so both of these levels here will be now technical support levels. Okay, so we will change it to green. There you go. We have a support at 1.2630, 1.2591, and we are just heading towards the 1.2782, which is very interesting because this is one of our main levels. Please notice that it's very close to this trend line here. So if we break above the 1.2782 and around above the trend line, then of course we will hit these levels here, which are 1.2875, 1.2880. So those are the highs, the grab of highs, as you can see from the end of the January 2021. So let's see how this will play out. Let me just put the recent high on this market. There you go, 1.2748. That's the recent high. That's the intraday technical resistance. So interesting kind of a pattern. It looks like bulls are on the move, and we are trading above the 50 level. There you go. Yes, well, right on the 50 level. So we are trading on the neutral level in case of the momentum. RSI adjusted to 14 days back, so it's very nice push up towards the neutral levels. And then of course if we break above 1.2782 and the trend line, the momentum should rise back up again and should confirm our breakout. If there is no confirmation from the momentum, even if the price is here and the momentum still will be on the neutral levels, that means the market might not break above those levels and might reverse, of course. But we will see what will happen on the Canadian dollar market. Maybe the news will trigger some buying frenzy. Maybe the news will trigger some selling frenzy. Anyway, we got our levels on the chart, and please keep an eye on the current situation on the Canadian dollar. So that's everything for me for today. Thank you very much for watching this short analysis, and I hope I see you guys tomorrow. Bye bye.